I'm going to begin, if that's all right. And our minute has gone, so I just want to make sure that we get moving and so on, and get into the session. I've already done a sound and visual check, so we're all good. So officially, I'd like to welcome you to today's FX Street webinar. This is Sam Evans of Online Trading Academy, instructor, lead instructor in the XLT program, and so on. Not my first session with you guys. Good to see some familiar faces. Welcome. Thanks for coming down, joining us today on here on the session. I'm just broadcasting from London, from my home today, just taking a little break from the Christmas festivities as well. I hope you all had a really great Christmas. I'm sure you're all looking forward to New Year and tomorrow, and obviously what that's going to bring. Normally, I like to try and do a little bit of education on these webinars as well, but I thought, let's take the time while the market's got that holiday volume into it to get through some pairs as well. Take a little look at what my own kind of key levels are, using my supply and demand areas that I like to employ in my own trading strategy on the US dollar and some of the other major markets. So I'm just going to give you my thoughts about some of these markets. What I want to do here is give you some kind of general analysis to help you with some direction on here. What I'm going to be looking for, where I'd expect some rallies or falls to come in. Basically, some of the key levels that I would like to see held, or if they are not held, to use for a signal for maybe that obviously we're going to continue some kind of momentum. How have you guys found this year? I mean, to me personally, for a world of Forex, half the year's been good and half the year has been pretty choppy, I think. We had a very bleak period, I think, especially that ended about 2 or 3 months ago, which seemed to be just indecision worldwide across the market. Average true ranges and volatility seem to drop off the edge of the cliff. And I'm one to like watching at ATR. In fact, I've done a previous webinar on this before, about using ATR to scan for opportunities, and we will look at that today as well. I believe that with volatility picking up, there's going to be some really, really good opportunities for us as a result. With that in mind, I'm going to just get straight over to the charts as it goes. And you're going to actually, just talking about those ATRs, by the way, we're going to start on the dollar index. I'm using the TradeStation platform here, guys. I don't know if you have access to it through your own platforms that you use, but I'm looking at the US dollar index, and I'm here looking at the traditional US dollar index as well. Anybody familiar with this? Just give me some yeses or nos. Anybody kind of got any familiarity watching the US dollar index? Let's just see in the room who's oh, you're a quiet bunch. You're probably good. Ray is there as well. Cool. Yeah. All right. Good stuff. Excellent. All right, cool. Well, I'm going to explain it anyway, okay? Depending on what trading platform you're using as well. We're all a bit slower off the mark today. I think we've got turkey hangover and food hangovers and stuff. I was just saying, actually, holiday volume is a little bit lighter, but it's all good. Listen, the dollar index, if you're a TradeStation user, the dollar symbol DXY is what it is. This is a delayed feed of it, by the way, because I don't use it on anything less than a daily chart, as you can see in front of you here. But the dollar index itself, it's much like the S&P 500 or the Dow. But it's the currency index. So as you know, a stock market index is made up of, say, in the Dow's case, 30 stocks. Those 30 stocks give us the broad index itself. So you can see at the top of your screen here where you've got some readings, the YM, or if you take a look where it says $INDU 17977 in the top left, it's the broad market index. The dollar index is just the currency version of that. So it's the value of the dollar priced against a basket of other major currencies. The euro, which is the major one, the pound, the Japanese yen's in there, the Swiss francs in that as well. And the Swedish krona and the Canadian dollar. So basically all of the majors are in there. The Aussie dollar's not in there, the Kiwi dollar's not in there, but the Swedish krona it goes back to kind of when they first pegged the value of gold to as $35 an ounce to the dollar after the Bretton Woods Agreement at the end of the Second World War. I'm not going to kind of bore you with all the history, but Sweden was a part of all of that as well. They got their way into, they were in the dollar index as what it is. You might also see that there's another one as well, and I believe the symbol is... No, it's not on that one. I'll have to... I can't remember what it is on TradeStation personally. But anyway, there is another one that the big broker FXCM use as well, which is their own version of it. But if you've ever not looked at it, it's quite a useful odds enhancer, I think, in trading to get a little feel. I.e., you know, if you've got a rally, if you take a look at these two charts side by side, okay, if you take a look at the euro dollar there, and if you take a look at a daily chart of the US dollar, you'll notice quite clearly that they're an inverse of each other. You see that? Yeah? So obviously, as we've had the dollar strengthening over the summer since July of this year, end of July through July, we've had that big sell-off in the euro since July moving forward. So they're an inverse correlation between the two. So that's really kind of what I wanted to focus my attention on. Because if key levels are holding on the US dollar, that is going to have an impact on the euro. It's going to have an impact on the pound to a degree, the dollar and so on, the Aussie dollar and all of those. Does that make sense, guys? Can I get some nods on there? Does that all make sense? Yeah. Yeah, Jonathan's just saying on there, the euro, the yen, the pound, and the Aussie are only in the FXCM dollar index. That is correct, Jonathan. So thanks to Jonathan for just sharing that. So you can, listen, you can use it. I mean, I got students in OTA who do use the dollar index within FXCM because it's part of your platform. I've just been, you know, trading Forex for quite a long time now. My first instructor basically put me into the dollar index in this, you know, the actual dollar index. So I've always used it. Personally, I like it because it's been around longer. So that's why I use it. And it's a useful thing because you can see as key levels are being hit, like key demand areas are getting triggered. So, for example, you know, there's a key demand area that we would see where the market rallied from on the dollar here. When was that? That was on the 2 weeks ago on the 16th of December. At the same time, no, I'll explain why as well, JS. Okay, JS is asking, is there a problem using it with a data delay? I'll explain a little bit about that in just a second. Give me a sec. So you can see on here, see the same day, the 16th, 12:16. Okay, here, 12:16 here. See, we hit this resistance area, or supply as I'd like to call it, on the euro and fell. We held the demand area on the dollar, and when we rallied. So do you see that kind of inverse relationship? So it's a good idea if you get a feel of kind of like that the dollar's looking stronger or weaker, or where the dollar itself may reverse. It kind of covers a lot of areas. It gives me a clue about what to expect on the euro, gives me a clue what to expect on the pound, gives me a clue what to expect on the Swissy and all of those as well. Now, a good question from JS was saying, is there a problem using it with the data delay? Let me answer that for a second. If you use TradeStation as your platform of choice, you'll know you have to pay for every feed. I'm a futures day trader, okay, guys? That's what I do for my income, okay? And I do my Forex for like swing trading and so on. So that's why I use this platform, because I love it for the charts for futures. But obviously I chart the Forex as well. You have to pay for all the feeds. You don't have to pay for a Forex feed with TradeStation, but you have to pay for the dollar index feed because it comes through a different exchange. And you know what? I don't really trade any of the other products on this feed. It comes from the ICE feed, the Intercontinental Exchange feed. You know, and I just don't trade any of the other products on that. So I just get the dollar a month, you know, delayed feed. And also, you can't trade the dollar index. You can trade it as a futures contract, but the volume is real light on it, so it's not really worth it. But you can trade the dollar index as you can use it as a guide. And I only really care what it's doing on daily charts and above, and then I'll use it as kind of like, say, for example, here, if I see on this particular day that the dollar index is holding this area of demand that we've got on this chart here. So let's just tighten it up. So this has turned out to be a little kind of lesson in itself. All right, so this little demand zone that I've got on here on a daily chart, just by knowing that we're at a demand area there when the market was down at this particular area, hitting that demand zone, right? That's going to make me look at the Euro chart, say, for that day and go, well, I should focus maybe on short selling, right? And that's all I need is I want a big chart to back me up. And then I'll do what I do on my 60-minute charts or 4-hour charts or any day trading charts on the Euro, because I'm not going to trade it. It just gives me a big guide. So maybe coming into a major area 1 week gives me at the start of the week on the Sunday when the Forex market opens a little bit of a feel and a little bit of an outlook for what to expect for the rest of the week on currencies that trade against the US dollar. Does that make sense, guys? Yeah? Just give me a nod if that's all kind of computing, yeah? So good. Well, let's do that. Let's take a look at the dollar, right? And let's just look at it. And we'll get back to taking a look at this dollar itself. And we're going to start big, and I'm going to give you a little bit of outlook because there are some key areas. You know, if we manage to continue strength in the dollar, that's going to have an impact on those euro dollar charts. And it's kind of cool because, you know, if the dollar carries on doing what it's doing, we're going to likely see more sell-offs in the cable. We're going to see more sell-offs on the euro dollar. We're going to see, you know, the dollar Swiss rallying up again. We're going to see the dollar yen continue its gaining as well. So I like to really start the year focused very heavily on the dollar, because then it kind of does a whole basket of analysis for me on a load of other currency pairs. All right. So that's where I'm coming at with this. Now, let's just show you the picture of where we're at. I'm going to expand this chart on here. And I'm going to take this to a weekly chart. Okay. Now, you can see, so 2014 has been a big year of moves up on the US dollar here. Now, if you look at the overall dollar of what it's been doing, all we're really at the moment doing is sitting near the top of an extended range. An extended range that has now been kind of in force for pretty much almost 10 years. Do you see that? Now, the dollar itself, in my humble opinion, and I always say humble whenever I give an opinion on the market, because at the end of the day, the only opinion that really matters is the market's opinion. You know, we either agree with it when we take a trade, our trades agree with it, or that they don't. So, in my humble opinion, this is a market that's been oversold for quite some time. If you truly look at the dollar over this ranging period that we've had, you know, you go back to the 2000s, we had a fantastic, you know, we were much higher. You go back even further and you really look at where that chart was back 30 odd years ago, and you can see what a trumping the dollar's had. And it's been kind of sat on these lows around this 80 mark, really not wanting to break 70 points, okay, for a very, very long time. Now, the thing is, and I look at this, I'm going to just take this up to a monthly chart. And if there's one New Year's resolution I would love to share with you, or really say to you guys, take into account, is when you, just if it's once a month even, you know, or a couple of times a month. Let me do it at the start of the month, the middle of the month, yeah? Start of the month, just check on those monthly charts. Give yourself an outlook on the bigger picture. I mean, if I had my way, guys, all I'd do is trade a monthly chart. That's all I do, because it's a lot simpler. There's not much more really to focus on, you know, because you can see when key areas of demand or support, or key areas of resistance or supply, as I like to call it, hold. Those areas, they give us huge clues as to what's going to maybe happen next. So let's just kind of zone in and track back in time what we have seen on the good old dollar. And I just want to get my lines nice and straight. And what you're going to see was there was a very key area of supply on this dollar that was formed in mid-03, so about 11 years ago, right here, that the market literally touched and fell away from. And on the way down, what the market did again was it formed another area of supply just underneath it. Okay? See this one just underneath it here? I'm going to draw these in for you. And then we'll go to the smaller time frames as well. And then what you can find is the market has then kind of batted its head back up against these supply areas over the last few years, and it's never really managed to take them out. So now we've got to let logic kind of creep in here, kind of get away from anything emotional and say, well, look, we never broke this area where this big rally happened from. I mean, big institutions were buying a lot of dollars down at this point, okay? And I can tell that because the way that the price moved away from here, and they had a huge amount of orders there, because if there's enough sellers, to match all those willing buyers down at this area, we would never have this rally in 2008. And look, we came back here in the early part of 2011, and we pushed our way right back to the upside again. Well, now what we've done, we've breezed our way quite beautifully back through this area of supply, and here we are now. Now, my thing on here is I believe, and I'm going to just throw this out there, this is a purely, and I'm not giving any time frame on this, is a purely kind of, if someone was to say to me, Sam, what do you think about the US dollar over, the next, couple of years? Now, even say for 5 years, by 2020, what would you say? I would really expect more rallies in the dollar. I think that dollar has been way oversold. I think people are very quick to write the dollar off. I don't think the dollar is done with. And I think that, as it turns out, I think there's plenty more upside available to it. But that's like a long-term outlook, okay? What we need to do as traders is say, well, what are we faced with right now? And while a lot of people are kind of, been jumping on this dollar rally bandwagon, my concern at the moment is we're in an area, or we've got a number of areas ahead of us where there are big challenges for the dollar. Okay, and they're at the areas where we're at right now, and it doesn't get much more big. It doesn't get much bigger when we're looking at markets than monthly charts. They're like monsters. All right. And all I see ahead of us is, over time, what we really, really need to do with this dollar is, if this thing is going to deal and push its way higher, it has to deal with areas of supply that I'm typing on our charts right now. And it has to get through these areas before it can go any higher. You understand? I mean, I look at them as kind of like red lights when you're driving along in your car. Right now, we're back in an area where every time the market's come back to, we've dropped like a brick. So until the market takes this area out, I'm looking at there's limited upside available on the dollar. In fact, while I see this $100 area, as a real key area, and I'd love to see the market get there, what we've really got to do is deal with these supply zones that we're at the moment. And that, for me, could be a real big challenge for the dollar. Now, it's almost like refilling the tank. What I'd like to see is this market pull its way back down again. And, this process would involve the market coming back down lower, maybe. And then what it would need to do would be to kind of give a gold opportunity for some new buyers to join the fray. A new opportunity for some of those big institutions where they were buying to really join the fray. Now, the thing you've got to remember about the dollar is it spends a lot of its time chopping around. So if we do have a fallback, I would say this: if we do get a correction in the dollar, it's possible that we could come back down to this 80.46 area to 78.73 area. If this area holds, we would expect a retracement and a retest of the highs. There's also, I'm going to have a little hunt around the 84.85s area, because I believe that there's a little pocket and something in here as well, which also may be a good opportunity to prop that market up. But while we're dealt with these levels of supply right ahead of us at the moment, guys, we have to remain realistic about the dollar. And I want you to look at that this is not likely to continue up in a straight line in an easy fashion. Okay, because we have to deal with these major areas of supplies, especially for me, where we are at the moment is going to be a real challenge. And even just above that, there's another little pocket just here. I'm going to go to a smaller time frame in just a second as well and explain about this as well. So it's not only the supply areas that we've got on here that we have to deal with that give a cause for concern for the dollar, but also look at the structure of the last 1, 2, 3, 4, 5, 6 months. Yeah? Look at the structure of those candles. We've not had a retracement. Now, trends do tend to continue, yeah? Yeah, exactly. There's a good one from Joseph. The dollar always to put in a higher low for the uptrend confirmation. You got it. right? Because we're putting this high, but a trend needs to have a pullback as well, doesn't it? And the only thing that just concerns me is we've had a real sprint. Look at what's happened when we've had done this before. Look at this big sprint that we had here in 2008. What happened, guys? Big correction, another push, fell back. Then in 2009, we had another big steady sprint to the upside. Then what happened? Big correction again. And you know, with markets, they're funny things. They're not that complicated. History tends to repeat itself as well. Okay, tends to repeat itself. And don't get me wrong, by the way, I'd love nothing more for than the dollar to get stronger. I want the dollar to get stronger. I'm planning on moving to the United States of America permanently next year. Okay, so I'd be much happier moving and basically taking on a new currency that's a stronger one. Okay. But at the end of the day, the red light is here that we have to deal with on this supply area. So for right now, this could put the brakes on the dollar pushing higher, which would also mean potentially, yeah. And I'm just going to make notes. On my screen. Potentially rallies in euro dollar, pound dollar, and Aussie dollar. Which could also, and I've spelt that wrong, there should be two L's there, okay? All right. Should be two L's there, by the way. Let me just fix that for you in just a second. There you go. I'm a little bit anal when it comes to fight things. And also, we would expect maybe some sell-offs in dollar yen. Although the dollar yen is a funny one. The dollar yen is a funny one because it can be a little bit of a safe haven currency. But potentially, okay, dollar CAD. All right. Especially that dollar Canadian. We'll take a little look at oil as well before we go as well, because that dollar CAD, if oil can muster a bit of a rally, guys, if oil can make a rally as well, that's going to put more pressure on the US dollar as well. Okay, that's what it's going to look like for the majors. So if these supply areas hold, expect rallies in euro dollar, pound dollar, and Aussie dollar, and sell-offs in dollar yen, dollar Swiss, and dollar CAD. Now, the way I trade, and I know some of you guys have been to a lot of my webinars over the last, I think I've been doing these webinars for 8 months now with FX Street. And I really do appreciate, you know, your feedback and your support when you come into these sessions. You'll know that I just trade what I see in front of me. I don't care. If it's a supply area, I'm short at it. If it's a demand area, I buy it. That's the way I do it. So, you know, I just go by what the chart tells me. If the chart decides to do something different and stop me out, then it's the chart's fault, not mine. I guess that's the kind of the way that I process it in my brain. It's the way that I was taught. So for now, you know, let's focus and see on this. That if these suppliers, and I'm going to give you some numbers, by the way, if you'd like them. Let me just give you some numbers on these if you're interested. They're the numbers on these areas as well. Okay. Okay. Yeah, I'm going to look down a little bit lower as well, Joe, as well, to see where a rally could come in, because I do believe that the best chance of a rally could be somewhere within here, yeah? So I'll give you my opinion on that, buddy, all right? Because you can't see it on the monthly, so we want to zoom in on there. Because any of you guys who like Fibonacci, that would be about a 50% retracement or around that area, okay? So I'm going to take a little look into there and see what I think as well, okay? That all good, guys? That all good? So we'll investigate what we can find somewhere within it, because there is some demand in here. There is some demand in here. All right. So I would also just check another area here, just if this thing does, which could take a few people off guard on this monthly chart. And I'm going to remove it because I don't want to have too many lines on my chart. But there's a little pocket right here that I'm interested in, around the 82.78 to 81.29 area as well. Okay, 82.78 to 81.29. There could be a decent rally if it does come, but I'm going to take it off the charts now because I don't want too many lines on my charts. All right, guys? Is this all making sense so far before I go down to the weekly chart and take a look? Yeah? All making sense, guys? Before I go down to the weekly charts to take a look, yeah? Very good. Great stuff. Great stuff. All right. Good, good, good. Let me just take this off. And I mean, that's, that's, your monthly outlook. But like I say, it'd be lovely for it to sell off back down here. But hey, guys, the old support becomes new resistance kind of thing. I'd be looking around anywhere in the region, it's 84.75 area or a little bit around there. Maybe this is a key area. If we go back in the past, the market has had bounces around this area before, and I may be a supply and demand guy, but I also respect that that's not the only form of technical analysis. Okay, so that is something very, very key to understand as well. Okay. This is a great question from Manoj here. Why is the O3 on monthly time frame such a notable supplier on the dollar index? The great thing about it is it's a very clear area, Manoj. The prices dropped here and had a slight base. And can you see how we attempted to get back to that area, but we never quite did it here, okay, on 531.04? Which suggests to me there was a lot of selling pressure in that area at the time to kind of really take that downward trend down to make a new lower low. And then we literally just touched that zone in '05 again and could not again penetrate it, and then had a push down. And this was really an area that kicked off, as you can see, this rally, the last key leg of this downward trend that we saw, which took a downward trend from mid '05 down to '08. So that was like a 2.5-year downtrend that was kicked off from that area. Does that make sense? So I always kind of look for the areas that kicked off the biggest kind of moves to the downside or key phases of the trend, like that final wave of that downward trend really did kick off at that particular area. So that's why my eyes are firmly on that area, because it's subtle. Do you know what I mean? And I want to respect it because we've never really managed a good solid penetration of that level of supply. Okay, so I'm not going to be quick to get too bullish if we break through this supply area. Yes, I'll run it to the upside again. If we clear through this supply, any pullbacks, I'll run it up to it by all means. But I would really focus on that supply zone from '03 at that particular point there, because I know that there was a heck of a lot of selling pressure on there from what I'm seeing on the chart. Great question, by the way. All right. Yeah, I just took them off again. If you want to quickly back on here, I'll pop them on for you guys. If you want to quickly do that, yeah, the line levels, and I'm going to turn off because I'm going to adjust my lines on the weekly chart. Okay, guys. So if you want to just take some of those numbers down, I need to go down to the weekly chart. All right, because I just want to investigate a mid area for a bounce as well. And then what we'll do is we'll just take a look and just see how some of these correspond with maybe the euro, dollar, pound, and also good idea to keep an eye on oil, because if we do get some good strong rally back in oil, it's going to put a ton of pressure on the buck. I don't try to be contrarian, guys. What I try to look at is, it's very prominent and evident that, markets have, the markets have been in uptrends and downtrends. That's great, but we have to think ahead and also think about where could that trend end? Where could we get the reversal? Where could we get the change in sentiment? Because for me, that's where the big money's made, is getting in at the lows and getting in at the highs. Do you understand? That's where the money's made for me. That's just the way it is. And again, I'm not saying my way is the only way to trade. Absolutely not. I like to just offer, share some knowledge that can maybe help anybody who wants to find a way to suit their own style and their own mentality. So here we go. Here's the area that we've got. Okay. And now we're kind of in a real key area, which is nice. So you can see now where I highlighted it. This would be our interim area on the weekly charts now. This would be our interim area. So that's my area here. Now, putting these on the weekly charts could be really good for you. This is the monthly chart's good for your position outlook. These weekly levels that we can look at now, well, they're going to be really key for us from the point of view of for swing trading, maybe. If you're going to do some trades and looking for the rallies. Like if we get a sell-off, I mean, there's one area here. I'd need to see a break of this area here on the weekly charts. Like if we sell off on the dollar here, I'd be looking for it to fall back down to this area of demand here. So this would be the key area next for me. So if we continue to sell off in the dollar from the current supply area where we're at, and you can see it's quite a wide area, I would be really eyeballing this area here. If this area of demand breaks, then the next one is this particular zone here. However, I really do like an untested zone, and I'm really feeling this untested area here. The price has not been back to this area here. And I just think, guys, this line that we have here is going to be very key. A lot of traders could be looking at this 84.75 area saying, well, this was resistance. This was resistance. If it came back down on here, you know, I'll buy it, and could get trapped very easy in buying a little bit too quick when there was a pocket right here. A pocket right here where we had a pretty big rally. Okay, pretty big rally. So I'll be eyeballing that 84 area because for me, you know, it's not as obvious. And, you know, I'm not saying that there's always tricks played in the market every time. But how many times, who in the room has seen like a nice support area overshot in the past, and it's gone like penetrated below it, thinking it was going to like old resistance become support, and then the price has penetrated through it and then stopped you out and then took off? That happened to anybody in the room? Or maybe an old support area become, you expect it to be resistance, or, you know, that way, right? So, you know, I always think about that. I think about where the big market players may be stepping in and buying. And I think sometimes you got to be a little bit right, Tommy, who hasn't? So I kind of protect myself against that. And I look for the pockets. And to me, the structure of the price in this little pocket here suggests there was a little pause. And then we really took off for 3 weeks here, suggesting to me there was a lot of buyers in that area and not enough sellers to really satisfy that demand. Hence, I'd be really comfortable to buy in that particular area. So that's where I'd be expecting the price to come down. So I know, Joe, you were saying about the 83.50 area. That for me would be the zone I would be looking at, and I'll give you the numbers on those. All right. So I've got 84.25, 83.80. So that for me could be a great area. However, before I even consider that, my eyeballing here, knowing that there's these two supply zones above on the US dollar, if we hold 87.57 to 86.90, and then we retest this supply area here, this is all this market could take. It needs to pull back to gain some momentum to push to the higher point. I mean, if we break through this supply area right now, I'm really going to be wanting to look for a pullback to this 87.57 area, okay? But I mean, it has to hold this area here for me, or we are going to see probably a collapse down to, or we're going to see a collapse down to the 84.25s area. We take that out, well, it's back to the 80s, in my opinion. So what does this mean? So what this means for us, guys, is, you know, we want to see this uptrend continue, but the first area we've got to consider is obviously a bounce at 87.57 to see if the uptrend is going to continue, and I'd be happy shorting the dollar and buying the euro and the pound down to that area here. But again, if that area does hold, we're going to see an uptrend back again in the dollar index. We're going to see the euro continue its descent. We're going to see the pound continue its descent from there as well. So we're kind of in a place where I don't want to be a buyer right now. I want to buy it cheaper. Okay. And if it goes off without me, heck, it goes off without me. But it's given me a good kind of view. And I'm hunting for a higher low right now. And this is the first one. And this is the second one. And, you know, guys, any of you Fibonacci guys who've used it over the years, we're going to be hovering around our 50% area here, somewhere around here. And again, those things overshoot. The markets have their best opportunity to rally around the 50%, or for the market to change its direction around that 50% area, if you've got any experience with Fibonacci and so on. All right, guys. So that's really the key areas, and there's plenty of room to play for profits between these areas by taking maybe any buying positions on the euro dollar down to here. And then if this area holds, I'm going to close out those positions. I'm going to be back to shorting that euro dollar back to the upside again. Okay. But I got no real cause for major concern to suggest that the uptrend is over yet. I will get concerned if this area here gets taken out. Let's find some other supporting evidence then for this to just take a look at. Okay, I'll leave those lines on for a second, and I'm going to just put this over to here. What I'm going to do is I'm going to put up crude oil, okay? Just give me a second. Let me just see. 103 is perfect. Because I said I'd mention that. Oh, wrong one. Just bear with me a second, guys. Okay. There we go. All right, crude. Let's take a look at a weekly chart and a monthly chart of crude oil. And there you go. There's an area on crude oil that I've been looking at on the monthly charts, which again could be a great area. I love it when markets kind of do their same thing. But do you see how we've had this good strong rally in the dollar? And obviously, you know, these are correlations, okay? These are correlations. But these two areas that we have on crude oil are key. Most people are going to be eyeing this $44 to $33 area. For me, the first area where I think there could be a real solid test for, or a great chance, should I say, for crude oil to rally is going to be this upper zone. So again, if I start to see maybe the dollar at the same time holding this, and also we trigger this 5104 to 4702 area, so say from $51 to $47 on crude oil. If that area holds on crude oil, you know, we could have a real decent rally. And I would say the first profit target I'd be looking at conservatively on that would be around $69, $69.50, with then, you know, just below $80 and just below the $90. It's going to have a rally at some point. You know, let's remember, you know, we've seen sharp sell-offs in the past, and you know, typically a sharp sell-off is followed by a very sharp rally back to the upside, just like sharp rallies are followed by sharp drops. Okay, this would coincide pretty nicely, this area on crude oil. This would be lovely. And if we started to see this area hold and a sell-off on the dollar, this could really be a market to help push that dollar down, because you typically see an inverse correlation between crude oil and the dollar itself. And the reason for that typically is because one thing, you know, crude oil is priced in US dollars, and also the dollar, you know, America are a huge importer of crude oil, so it hurts them having to buy it as well. Also, another thing to remember is to buy crude oil, when people step in and start buying crude oil, they're going to actually have to sell their dollars to buy the likes of Canadian dollars and obviously where else they're buying oil from. Okay, if you're going to be buying Scandinavian oil, Canadian oil, whatever you're going to get your oil from, okay, you're going to have to sell your dollars to buy the other currency where you're to buy the currency from the country that they're going to be buying their oil in. Okay, so again, you're going to typically see a little bit of a inverse kind of relationship in those particular areas. So I'm not going to go too deep with crude oil, but one thing to watch from that one is that 5104 to 4702 area. A huge imbalance there. A lot of buyers stepped in at that particular point, and a real key area for us to eyeball. And again, if I start to see some rallies coming from crude oil at that particular place, then I would expect a further sell-off in the dollar index. And generally, you're going to find the euro and the pound benefiting from that particular area. Gold, absolutely. Why don't we take a look at gold before we head off? Let me just get my code up for you, okay? On here, because I've got my monthly chart of gold on here. Let me just do this at GC 120XN. Let me just do this for you. Okay. You might be wondering what all these numbers are on here. Let me just do this. GJMQZ. GJMQC. No, hold on a minute. I have to just get this right because I have to get GJMQZ. GJMQZ. Bear with me. There you go. I got it. All right. Let me just check I've got the right code on here because I have it set into my computer. 120XM plus GJMQZ. Perfect. All right, let's take a look at gold. Now, again, gold is another one, right? We see a rally in gold. We're probably going to see a fall in the dollar. So another good market for us to keep an eye on. And again, it's a very, very similar thing. I've just got one major area that I'm at the moment that I have been eyeballing and looking at on gold. But again, for me, this zone here on this huge chart is 1118.82 to 1042.65. That's a very, very key area. Again, just before the $1,000 mark. Okay. The only thing I'd say about gold, however, it's going to have a huge challenge at this area. There's a beautiful zone of supply that could cause this some real problems. And one of the things about gold, I think it's kind of really just used as a pure commodity, safe haven play now rather than anything else. And 1280.81 to 1347.89 is going to be a major, major challenge for gold in that area there. I mean, if we can blitz through the 1400 mark next year, then we're going to see tests of 1580 and higher again. But again, wouldn't be too surprised to see some range-bound activity between this 1118 and 1280 area, guys. Will it have as much of an impact on the dollar as the other markets? I don't think so. Again, I think it enjoys more of a flight to quality status than anything else. It's not really a commodity. I don't think we're going to see it impact and correlate quite as much. I mean, it certainly hasn't with the dollar inverse correlated quite as much as, say, oil has. But it's always a good one to look out for. I'm not a major gold player myself. It's not a market I really enjoy. I find it quite temperamental. I don't find it, the nicest mover in the world. But it's always good to have a bit of analysis on here. And again, this supply and this demand area that we've got above and below are the key areas that I wouldn't be too surprised, just based on the way ATR is dropping off and the structure of the market at the moment. I really wouldn't be too surprised, to see maybe over the first quarter of the year a little bit of kind of sideways action between these two major areas. For me to get real bearish on gold, I'd have to see a break of $1,000. To get bullish, I'd have to see a break of 1400 on there. Okay, guys. So, I mean, there's kind of your majors on here, and it's interesting. We've looked at the dollar, we've looked at gold and crude oil. We haven't actually kind of looked at the majors, but we don't need to. If we go back over to our dollar index chart that we looked at right at the start, and then we look at obviously what it is, this is the beauty of it. You're going to see right now, if you take a look on this chart, we're in these monthly supply areas on dollar index. So guess what? We look at euro dollar. Oh, look what you're going to see. We've got major, huge areas of demand coming in on the monthly charts for the euro USD. Start looking at the same thing. So again, guys, I cannot get bearish on this market if we're holding the 120s. And even if we hold the 120s, we've got a lot of challenge of demand here. So this euro is kind of begging for a rally, I think. And if we hold those supply areas quite nicely if we hold those supply areas on the dollar index and we get a good rally on crude oil, don't be surprised to see a decent comeback on the euro USD. And, I'd be first target challenging around 125. Push them 130, and if it broke 130, then we're going to retest those highs. But this is the area really in question for me right now, so I'm finding it very difficult to want to sell too heavily into these areas based on what the dollar's telling me. And then this is again over the next quarter or so, over the next 3 months or so, based on what gold is telling me, what the euro's telling me, what the dollar's telling me, and what oil is telling me as well. So I hope you found that useful, guys. If you've never looked at the dollar index, a little bit of correlation and stuff, maybe in a future webinar next year, I can kind of expand upon that a little bit as well. I hope that helped. Normally I just go for the pure education, but I thought it might be fun to just look at some of these major markets with you and kind of, just give you my kind of thoughts on the key areas and the things that I'm thinking as well. So just gives you a little bit of an idea kind of how my brain works and stuff. And what I'll do is on our next session I'll get into some kind of short-term trading opportunities with you as well, and how I scan to looking for those trades that come along that I'm going to maybe be holding for a couple of days or maybe just a couple of weeks and so on. So thank you all for your participation. It's great to be here as always. Thank you for a great year. I'm looking forward to doing more with FX Street over through 2015 as well, and coming into more of these webinars as well. You guys have, I've had a very, very warm welcome from everybody this year, and you guys turning up and taking a part in this, it makes it really, really worthwhile for me. So thank you so much. Thank you FX Street for having me as well. Always a pleasure, and have a wonderful 2015, and I'll see you all next month, which is only just a few days away. Okay, enjoy the rest of your day. Take care everybody, and thanks once again. Goodbye.